In a previous video, we briefly discussed how moving averages can be used to help determine not only when price is trending up or down, but also when price is changing direction. In this moving average crossover strategy video, we are going to focus on using moving averages to identify when price is changing direction in order to identify a high probability trade setup once the moving average crossover has occurred. By the end of this video, you'll be able to easily identify and enter a moving average crossover with confidence and precision. We are going through that strategy step by step, and we're starting right now. The moving average crossover has the potential to reward you with some significant winning trades. Crossovers can be a reliable setup if traded with caution and discipline. However, we never recommend that new or beginning traders use reversal setups. Reversals inherently come with additional risks that need to be eliminated before entering a trade. And if you're still a beginning trader or not yet profitable, then first and foremost, it is best to trade continuation setups like the moving average pullback, instead of a reversal pattern like the moving average crossover. There's a link below if you would like to watch that video instead. Either way, no matter which setup you decide to trade, there are specific rules and entry strategies that can help us to remove some of the risk before entering a trade. This video covers the exact rules that we use to make this moving average crossover a reliable, high probability trade setup. The moving average crossover is a simple setup to identify. The setup is identified as one faster moving average crossing over another slower moving average, after which a reversal might have occurred. You have likely heard of a very well-known crossover, one that is popular in the investing world, which goes by the name death cross, or cross of death. This is well known among investors and easily identified when the 50-period moving average crosses over the 200-period moving average, signaling a significant reversal, at which point long-term investors will look to sell their long position. Much in the same way that an investor would use the 50 and 200-period moving averages to identify a change in trend in order to make a profit, we as traders can use a similar set of moving averages in order to do the same. We use the 20-period and 50-period exponential moving averages. This setup is going to use the same two averages. However, for those of you who have already watched part 2 of our moving average trading strategy video, we obviously use our singular moving average, which you learned about in that video. We will pair that along with the 20-period exponential moving average in order to identify high probability moving average crossovers. If you have not yet watched either of our part 2 videos, then simply use the 20 and 50-period exponential moving averages. One of the best things about moving average setups is that they are incredibly easy to identify and screen for. While the setup is easy to see, it is not as easy to simply enter. A reliable entry strategy will allow us to time the entry and confirm the move, granting us the precise entry point needed in order to enter the trade during the move, instead of being early and getting stopped out for a loss. The setup. A change in trend may be occurring when the 20-period exponential moving average crosses over the 50-period exponential moving average. This crossover is the signal that shows a change in trend might be occurring, not that a change in trend has occurred. It is very important not to blindly enter a trade just by seeing this crossover. This crossover is the signal that we are screening for, not the signal that will trigger a trade entry. Once we have screened for and identified a crossover signal, the entry point that we are looking for is going to be the first pullback to the moving average zone that occurs after the crossover has completed. Price should move through the averages, clearly crossing the 20 through the 50. A significant move through the moving averages will be required in order to achieve a clear cross, as well as give us enough room for a moving average pullback to occur. Pro tip: moving averages are a lagging indicator. It is extremely important not to enter a trade just as the moving averages are crossing. Lagging indicators are still subject to change as the current price is changing. Moving averages can cross and then uncross as the current price is changing. Be sure to wait for a clear move through the averages, which definitively show that the averages have fully completed a crossover. As stated in previous videos, the moving average itself is not a sufficient indicator to take trades off of. However, for this setup, it is a good enough indicator to confirm the crossover is holding and that this is in fact a good place to take a trade entry from. You can undoubtedly further the probability of a winning trade here by locating and plotting key trading levels as well. If we can align a key trading level to this point of interest, then we will radically increase our chances of a winning trade. Remember that crossovers are good. The first moving average pullback after the crossover is better. Having an additional key trading level at that point is best. Our moving average pullback, key trading levels, singular moving average, and entry strategy videos will be linked below in the description as well as at the end of this video. All of these videos further build on these concepts in order for you to better understand how and why a setup is taking place. We recommend that you master all of these concepts in order to achieve the highest probability of success in any setup that you are trading. Once we have identified a moving average crossover that has completed and price has moved into a pullback towards our moving average zone, perhaps we are even lucky enough to have a key trading level located at that price as well. While it is a high probability setup, it is not the highest probability trade that we can find. While price is likely to bounce off of this level, we need to know that price is favorably reacting to this level through a clear-cut entry strategy that tells me when price is making a move, essentially giving me a confirmation that price has reacted to the level as expected and is now ready to make the additional move. An entry strategy could be anything that you would like to see which gives you a definitive confirmation of when price is moving. It could be a double bottom or inverse head and shoulders. The bottom line is that while we can create the highest probability setup imaginable, I personally will not enter any trade setup without getting the confirmations from our entry strategy first. That full series on our entry strategy and singular moving average can be found for free through the link in the description below. Before we wrap up this video, let's take a look at a few examples. Price trends down. Price then pushes back through the moving averages. This is ultimately pulling the 20 EMA through the 50. At which point, price then pulls back, reacts to our trading zone, and finally makes another run into profitable territory. Price trends down, pushes back through the moving averages, pulls the 20 EMA through the 50, price pulls back, reacts to our trading zone, and then makes another run. Please don't forget to like and subscribe if you learned something new. Also, don't forget to save this video in your trading folder so that you can revisit us in the future. An occasional refresher on this material will only help to solidify these concepts further. I wish you the best of luck in your trading. Always remember to trade safe, trade smart, and trade profitably. Thanks for watching, and happy trading.